Perfect. Yeah, the next few weeks are gonna be really interesting though in the market.
Yeah, we got a couple some crazy volume here, man. We got CCL
Mm-hmm.
that has insane volume, and we're looking at NAT. Both of these have crazy volume.
Oh yeah.
Look on stock to it. Yeah.
Oh, I'm sure they're up there. I was having a look at what's trending right now. It's a little. Oh, dude, it's you have Finviz as the thumbnail, man.
NAT. There's NAT. Oh, this is gonna be the thumbnail.
Yeah. So. Okay. Give it a second. Put that in there.
CCL not trending, but NAT is trending. Let's take a look.
Just give me a second here, man.
Yep.
We'll hop right into it.
Wow. Implied volatility is off the charts
For which?
for NAT.
Oh yeah.
Yeah, I think they're an oil tanker.
Ooh. Okay. Want to hop into it here?
Yeah, we live?
Yeah, we are live.
Sweet.
What's up, everyone? Breaking down trades again every morning. We got a lot of stuff. So today we're going to try and get it going a bit quicker pace. So we're going to actually just use our scanner. We're going to stay in the tool this time pretty much. So we're going to look at what's got different factors that we look for right now. So like implied volatility being really high relative to what we forecast volatility to be. We're going to look at earnings events. We're going to look at non-earnings events. If you have anything in particular that you want broken down, all you have to do is leave a comment in the chat box with what you want broken down. We'll get to that right away. And we're just going to blast through ideas here. We'll talk a little bit about how we can structure different trades. We'll talk about, where we're seeing the opportunity. And then we'll probably be moving on to the next one if there's no questions. So make sure to drop questions if you have any, because we're not going to be spending a ton of time on each individual trade.
Yeah. Nice.
Let's do it.
First one we're going to be looking at is NAT. So NAT is a it looks like it's an oil tanker. It's been trending on StockTwits. It's has insane relative volume. You can see the action here is just like out of this world. It's the highest on the whole chain on all equities. And what we're seeing is that our implied volatility is so high compared to our forecast, right? So you can be selling these options, these near dated options, for some decent cash. Look at this though. Market's just really thinking that the stock's going up, man. Like they're really betting this going up to the upside.
Mm-hmm.
And we can quickly take a look at skew here, and we're basically seeing that it's all-time lows, right? So pretty intense here. The market just like thinks this thing is going to blow through the roof.
Yeah. What do you see going on with
9% today? Your mic's off, Sean.
Oh, no problem. I was just going to say, we got some other stuff there. Like if you look at the action, right, this thing is literally all eyes are on this thing right now. This thing has a ton of action relative to what it normally has. The implied volatility is relative to our forecast is as high as it gets pretty much. Like it obviously could go higher, but if you look at it, it's 10 out of 10 in the bottom right corner. And what that tells us is that relative to the typical ratio, this is like a very high side for it.
Yeah. This is extreme, right? You can see basically like the call put ratio here. Everyone's buying the calls. And if we look at the open interest, call put OI ratio, it's like for every put, there's 5.75 calls. So, and for every call being bought today, for every put being bought, there's 10 calls being bought. So it's just insane amount of call buying here. This company isn't going to be, it's related to oil, right? It's not related to COVID or anything like that. Upside vol is just way too high, in my opinion. You should be selling that. You should be selling that all day, every day.
Yeah, and that's the game, right? We want to be, in the end of the day, we're looking for an edge, right? We're looking for where things are cheap or expensive. We want to sell expensive. We want to buy cheap. The game hasn't changed. It's the same stuff that we've been doing in stocks for years.
Look at this thing. It's like going up to all time. It's like just getting parabolic, man, to the upside. it's gone up like almost 100% in the last month.
Hey, Jordan, so we have someone in the group in the chat here looking to pick up a trade on Tesla.
Okay.
They just want to buy the stock though. So they want to take a directional bet on it going up. They want to buy the stock. Is there anything we can help them with here?
Let's take a look. Let's jump into it. So Tesla earnings tonight, I believe. Let's head over to earnings trader.
Tesla earnings tonight?
I believe so. Let me just make sure. Yep. Tesla earnings tonight. Sorry, no. It's tomorrow night. Tesla earnings tomorrow night. And so I guess Buddy wants to buy the stock holding through the event. Right? So a couple things. Keep in mind that the average move is about 9%. Okay? So you're going to have a big swing tomorrow. Right? You're going to have a pretty big swing tomorrow. And in terms of a directional view, so one thing to keep in note as well is that Q2 usually has the smallest moves. Okay? So that's this quarter right now in April. It has the smallest moves. So keep that in mind. If you're looking for a massive swing, you might not get it. Something to note about Tesla. I don't know why that's all bunched up there.
How's the implied volatility for it? For just regular, like if you were looking to buy it, not just around the earnings event, but in general.
Yeah.
Oh, wow. We're actually not seeing crazy implied volatility.
Yeah. So implied vol is pretty in line with our forecast.
Mhm.
So the volatility is not too crazy. In terms of skew, because I know you want a directional bet. So just check this out, right? Like the market is expecting some big moves to the up or downside, right? You can see it's basically flat here, right? It's flat. And then the wings are pretty pricey.
Mhm.
So, we can see that quickly if we just plot this. How curvy that smile is at all-time high. So the market's thinking a massive move up or down, but they don't know where. They don't know which direction, right? It's not like it's skewed to one direction. However, they are slightly bullish. The market is slightly bullish here.
Is that the 30-day?
What's that?
The red's the 30, right?
Yeah. No, the red is the 10. Let's see what we got on just quickly here for the sense of it. Okay, so this could be a sign that Tesla's probably going to make new highs actually, or is going to go to the upside because retail is not that bullish, but the option chain is a lot more bullish. So that could be a sign that sophisticated investors are buying up the calls here in anticipation of a large up move. So if that gives you any confidence, go for it.
Pick it up, right? It's you got to look at also what's your time frame for holding here, right? Like with something that's usually as volatile as Tesla is, it's like, do you want to be holding this for the next 6 months? I don't know.
Yeah. So something else to keep in mind is like on the open interest for a call put ratio is for every one put being bought, there's only half a call being bought. But today, for the call put ratio, for every put being bought, there's almost 2 calls being bought. So for some reason, and this is weird because Tesla's down right now, but for some reason, people are buying up the calls like crazy, and it doesn't look like it's retail.
Interesting.
Yeah.
So yeah, go for it, man. If that's what if that's the talk you want to have, pick that up, man. Let me know how it goes.
Yeah.
If you make a lot of money, I'm expecting a bottle of champagne, though.
Exactly. A little bottle of wine. I wouldn't mind, right? And especially because of a 9% move, it's either you're going to make some big money,
you're going to lose some coin.
You're not. Or you're going to lose.
Let's keep moving here. Let's go to the scanner.
Yeah.
So, guys, a really cool feature that we have, like, basically, think about it. Like, there's, you know how when you go on the stock boards and everything, everyone's looking at the same like 10 stocks pretty much. Everyone's like, oh, what's going on with INO? What's going on with UPS? What's going on with Apple? What's going on with Tesla? Well, the reason is that there are so many stocks out there that are you going to start from scratch and make your own analysis? Or are you going to build on the shoulders of the people who are around you that have looked? And so that's what we end up seeing. We see that we want to get away from that, right? When you're looking for a real like good trade, you sort of want to look where people aren't looking, because the less eyes that are on something, the more inefficient it is. And the more inefficient something is, the better the trade. So what we do is we built out this scanner here. So we have one for earnings. We have one for just regular events or for like regular day to day. And it lets us look at 1,400 stocks at the same time, 1,428 of them. and we can filter them and and organize them based on a bunch of different factors. We picked all these factors because they're proven to have, different correlations with pricing in the market. So, we're going to show you how we use that. And then we're just going to go over like some of the top 10 trades that we see here. And, if you like any of them, feel free to break it out or take a trade on it.
Yeah. So I quickly just scanned for average option volume over a certain threshold. So just to make sure it's liquid. And then I just search for a price above 15. I don't like trading stocks that are too cheap. And, NVAX came up right away. So let's take a look at, and then I filtered for the highest implied versus realized. And so NVAX came up on that list as, let's see, 1 second, guys. So I pressed back by accident. Okay. So we got NVAX. This is big on our list. Okay. So it looks like it's moving quite a bit, but guys, look at this. The implied volatility is 170 and our forecast is only 124. Okay. So this could be a really good short. I don't know why it's, what's moving the stock so much. But this is extreme. And you can see like, there's not too, okay. So this, I wouldn't actually be too excited about, just for the reason that there's no action going on. So if it's not, so like basically not a lot of retail are looking at this stuff. So for that reason, I probably don't want to take the trade. So let me go and increase the action a bit here. Okay. And we will scan for, let's go to, so we'll say price above 15. And we'll go to average option volume. Let's go up a little bit here. All right. And let's search for this. All right. Not much to look at, man. 3M. I guess they had earnings.
Yeah, they did.
They had earnings. So there might be some residue vol left over here, guys, to be selling. And hoping to collect that spread right now as it goes into the close today.
So for this, would you recommend like getting rid of the position later today?
Yeah. So you could, for example, like you could price the straddle, sell the iron condor, and then close at the end of the day.
Nice. You're not going to make a killing on it, but you can collect a nice little profit.
It's a positive expected value trade.
Exactly. Cool. You want to move? Let's just blast through like 10 trades for people here, because in the end of the day, everyone's going to take different trades, and there's honestly a world of opportunity right now. So let's just keep blasting through them. If you guys have any question about any particular one, let me know. Jordan, our buddy Howard's in here as well. He was making a few comments about Tesla. Something that we overlooked that he mentioned was that apparently what was it?
What's up, Howard? Great to have you here, buddy.
The implied volatility is below the historical volatility for 30 days.
Let's see. For earnings, you said?
No. Well, for earnings, he says that he can see an 11% implied move in the option, but I don't know if that's isolating the event.
So yeah, I'm gonna put up the volume here. Okay. So Howard is saying that the implied is below realized. So yeah, the realized volatility, Howard, for let's say like the 10-day option, or I don't know what platform you're using. Maybe it's Thinkorswim. So we'll say the 20-day option. The realized volatility is above the X earnings implied volatility, right? So it's above the volatility once we strip out the earnings event. Is that what he was saying, Sean?
I'm not 100% sure, but if you look at the historical,
what's that?
If you look at the H vol versus R vol, he says that he's talking about implied vol, not realized vol. So yeah. I'm not 100% sure actually.
Can you read out his comment there real quick?
Sure. So what he had said was, so two things. One, the short dated straddle is implying an 11% move. and that the implied volatility in Tesla is still below the historical vol for 30-day.
Yeah. Yeah. I mean,
The R vol.
yeah. I mean, it's currently in line, right? I guess for the 30-day, that 20 business days, it's in line right now. So it's in line with historical volatility. And we calculate volatility differently. Thinkorswim uses close to close volatility. We actually go one step further and calculate intraday volatility over that time period. So we actually get a better forecast. We use the open, high, low, close. So we try to get a better forecast of what realized volatility actually was. Mm-hmm. And then in terms of the earnings event, yeah, so we're getting 11% as well. Yeah, 11.1% for the implied move on Tesla.
Cool. Let's keep going here.
Yeah.
So guys, if you have any trade that you want us to actually take a look at for you, drop it in the comments. I'll be happy to take a look at it. We'll break it down. We'll give you our recommendation on some trades you can take. But until we get a comment like that, we're going to just keep moving through stocks. Look at some of the stuff that our scanner's showing us is inefficient today or has some sort of opportunity we could break down a bit further.
Yeah.
So Jordan, why don't you keep going there?
Yeah, let's take a quick look at earnings tonight. Let's see what
see what there is.
Okay, let's see what we got on the list here, guys. 2020. Oh, today's 28. Perfect. Okay. Yeah, I think we got a long list here. Wow. Okay, so we'll do. Let's get something that has some serious volume. Let's see if there's any big names here, guys. Okay, so we got AMD tonight. Okay, so that's going to be a big one. Ford, we got Starbucks as well. So let's see what these are implying here. Let's take a look at AMD. So AMD, okay, so this actually doesn't look like a great sell on the straddle side of it. Like the implied move is 8.4%, or the average move is 11. So this is not, and like selling, buying options has done poorly, but it hasn't done terrible. So for that reason, if you guys think that AMD is going to have a big move, it's probably a good bet here. It's probably a good bet to buy the straddle. I don't think there's a lot of risk in it. And you can see as well, like Q2, which is like the April quarter, has the largest moves. Okay, so if you guys are going to bet on AMD, go for it. If you guys think there's going to be a big move in one direction, buy the call, buy the put. It should be totally fine. Assuming your view on direction is right, you should get paid out. Okay, let's look at another one here. Maybe someone I know. Let's take a look at Google.
And what's cool as well, if you look at seasonally, it actually it moved the most in Q2.
Yeah, exactly, right. It's moving the most in Q2. Okay, let's take a look at Google real quick.
Cool.
Okay, so Google, selling vol has been pretty profitable on this thing. So something else to notice though is that Q2 is one of its biggest movers. You could definitely sell some vol here. I think you guys are going to be okay. It's not a huge edge though. Like the edge is not huge, right? The implied move is 5.22, average move 4.1. It's not like you're going to be selling vol here and make a killing. Yeah, that's my opinion on Google. Don't go too big on this thing. It's a big stock. It's something. If you guys are buying options here, it might not pay out the way you expect it to. So keep that in mind.
Let's take a look at LUV.
I thought they had earnings last night, if I'm not mistaken.
There's still a lot of vol. It's huge talked about on
StockTwits.
StockTwits.
Wow. Yeah. Right. So this does not look like a bad idea to be selling some vol here, guys. Although it looks like the 10 days to expiration, Sean, has like dropped right to where the 30 days to expiration. So you're probably not going to be better off selling the near dated option. You can probably sell like the 2 week option. So that's the May 15. You can sell those options right now for probably a really good price here.
Nice. Yeah. Okay, so Mohammed wanted us to take a look at LMT.
I believe they have earnings as well, or no, actually, I think they had earnings. Let's figure this out. Let's see what we got here. Okay, yeah. So they just had earnings, I think, recently, and now they're next earnings. So this is not an earnings trade, I'm assuming.
No, just in general.
Yeah.
Mohammed, what's the trade you're thinking of on that?
Yeah. One thing I'm not a big fan of is like if you go on this, if you go on the message on the Facebook message boards, you'll see people like thoughts on this company. It's always imperative that you have your own view as well before you go into this, like, and before you get someone else's opinion, right? You have to think about what your thoughts are. Okay, LMT implied versus realized looks pretty normal versus our forecast looks pretty normal. I don't think there's any edge here in terms of skew. Of course, we're gonna have a little bit of downside skew here. This is a big company, and um, you know, volatility is gonna be to the downside, and you're gonna have managers that are um, buying up puts and call overwriting. Okay, so no opinion here, Mohammed, but I would say volatility looks fairly priced here, in my opinion. Directional view, unfortunately, the market's not giving me anything out of the ordinary.
He's saying it was the best performing in his portfolio. That's really good. But what we're looking for here is like, is there any edge that we can capture, right? So obviously, like you could buy us any stock, whether there's an edge or not, and it could go up. What we want to find is like, okay, like, obviously we're focused on options as well. But what we're trying to find is like, okay, like of the 1,400 multiplied by all the options out there, of the 20,000 things we could be trading, what ones give us the best payoff? Right? Can we filter out bad trades and leave ourselves to spread our risk across good trades? And then, that's how we come out, winning in the long run. So one more that he wanted us to take a look at. Let's take a look at RTN.
Is this Mohammed? Sean?
Yes, it is. Yes, it is.
Is what's his view there?
He hasn't given us a view, but I'm assuming it's long.
Okay. I don't have RTN with us. It must be a super small stock. Super small. Yeah. I don't have RTN with me.
So Howard believes there's no edge in any of this stuff.
In what stuff?
Anything we're doing here.
Howard, why is that?
He's like, edge is defined as options that are mispriced.
Exactly, right? So if you look here, Howard, so let me explain this to you. Let's look at Tesla. So, okay, Tesla's not a good example because it's fairly priced here, but let's look at something like, which one had a big one today? Which one were we looking at this morning, Sean? The oil tanker?
I can't remember.
Okay, maybe Apple has a little bit of a difference here. Okay, so Howard, the implied volatility for the 20-day option, if we extract out the earnings event, is 27% for Apple. Okay, so the market expects the stock to have a volatility of 27% over the next 20 days if we strip out the earnings event. But when we're trading options, we're trying to find mispricings, right? So for that reason, we are pricing these options through volatility. So if we think that the volatility is going to be 32% and the current implied is only 27%, then that option is cheap for us. Does that make sense? As long as the stock realizes 32%, we're going to make money. Okay, so this is a forecast. This is not realized volatility. This is our forecast, given a whole bunch of data, given a whole bunch of information, what we think the next 20 days volatility will be. And it's higher than implied volatility. And for that reason, the option price the fair value for us should be higher. So we can buy it here, gamma scalp, delta hedge, and then sell it for a profit. Does that make sense? So there is edge in this. If our forecast is better than the markets, we have edge. Okay? Like when you're trading, you're always trying to forecast better than the market. And if you can do that, then you make money. If you can't do that, of course, then you lose money, right? If our forecast is, let's say 32, but in actual fact, it's 25, the realized volatility is 25, then we're going to lose money.
So this is the thing, Howard, like so what Howard just said there is like, you're defining edge differently than how the market defines it, which is okay, but that's not how the market defines it. It's like, okay, in the end of the day, we're looking for an advantage over the market.
Right.
We're looking for a way to price options better than the market to find inefficiencies. Right. This is, right. Like this is, I don't know what else to say there. Like you can whip out the dictionary if you want, but like, we're just trying to find something that works.
Yeah. Like at the end of the day, Howard, you make money when your view is different than the market's. So the implied volatility is the market's view. Okay. Now, if you think that the implied volatility is right, there's no trade. You should. There's no trade at all. Your edge is zero. Your edge is when you actually have something that outperforms the market. So this forecast number that we have here takes a lot of information, and we've tested it. We've tested it to see, okay, well, how well has it done in the past? How well has our forecast done versus the market? And it's a lot better, right? So we think that this forecast is going to be more accurate of what is going to happen in the future than what the market thinks. And so for that reason, there's a discrepancy. And now we have an edge here because we can forecast better than the market, right? That's our edge. We are better forecasters than the market for volatility. Okay.
Cool. Let's look at a couple more stocks, and then we're getting towards the end of our live here.
Yeah, let's do it.
Guys, if you've been tuning in this whole time, if you haven't subscribed to us, helps out the community a lot. It'd be great if we could get more opinions in here. So if you guys have any trades that you want us to look at, we'll be happy to break it down. This is good data. This is good stuff. Like this is stuff that you won't find anywhere on StockTwits. You won't find anywhere on any stock forums. So, you'll find
some of this stuff on a Bloomberg terminal, but we try to go that extra step, try to specialize and actually go further than what Bloomberg does in regards to earnings trading and to volatility trading. Is there any names there, Sean, that we should take a look at?
RTX.
RTX.
Yeah.
We don't. Is that Mohammed asking?
Yeah.
Yeah, Mohammed. We don't have that. How come you have all these little companies?
I know. Remember, Mohammed also trades European markets as well, so it might be a crossover.
Yeah, only U.S. markets. Only U.S. markets here.
Hey, Mohammed, thanks for that. He's asking about how much do we pay for this setup. It depends. Like we do a lot of web scraping ourselves. We have some paid data sources, and then we actually built out the terminal ourselves.
Yeah. So this is not something that we went and bought. This is something that we built. I built this a while ago when I was trading earnings. Bloomberg just wasn't cutting it, and so I had to go a step further and build out this thing by myself.
Okay, let's look at one or two more stocks, and then we'll move on.
Yeah. Is there anyone you were looking at specifically, Sean?
No, just use the scanner. We'll put, here, let me see here. Let's take a look at.
I want to look at a stock for Howard, man. I think Howard needs a trade to put on.
Let's well, in the meantime, why don't we take a look at CGC? Canopy's been trending right now.
Yeah, nice. Why? What's the news on Canopy?
Let me have a look. I'll do some research.
Maybe his earnings? No earnings. So
the same news as always. Talks of a buyout. Talks.
Yeah, but you know what? You're not seeing a lot of call skew. So maybe that could probably be misleading information, right? Because you'd see usually if there's actually potential of a buyout.
No, there isn't. I was just being sarcastic.
Oh, okay.
There's always rumors floating around these stocks.
Gotcha. Yeah, so volatility is not wildly overpriced here, but it's something that we think if you want to be selling vol, you could definitely maybe. Honestly, the discrepancy is just not big enough right now for Canopy growth. But But yeah, I definitely don't think there's any buyout or any big news to the upside, because usually you would see on these small companies, especially with the weed industry, when like you get a whole bunch of potential takeovers, bids coming in or anything like that, you're going to see calls skew. But here we're not seeing that. So I wouldn't say there's any sort of buyout potential coming out anytime soon.
Hey, so Howard wants us to take a look at TMO.
Let's do it. That's funny, actually. I think this is Thermo Fisher, if I'm not mistaken.
This guy.
This guy. He's having a good laugh, man. He's having a good laugh over there. You know, it's awesome. We really appreciate you coming on the lives here, Howard. Okay, Thermo Fisher down 3.5% today, and we're seeing quite a bit of skew here, Howard. We're seeing quite a bit of skew. So, if you don't think this company is going to be moving down anytime soon, you could be selling some puts here, right? You could be selling some puts here, maybe buying some puts on something else if you want to do a relative value trade. In terms of implied vol versus forecast, it's pretty much in line. So nothing too wild over there. And we don't have any earnings. But you can see how you can see this thing literally gets crushed. Like buying volatility around earnings sucks. So you can take the opposite side and be like, okay, well, on average, not on average, almost every single time, the market overestimates the implied move around the earnings event. So let's actually take the opposite position and sell vol. But earnings are not until another 2 months. So
Yeah, even on the last earnings event, though, got crushed.
What, the implied move?
Yeah.
Right, the implied move was like way higher than what was expected. Cool. I think we'll wrap it up there. It's 11:04, Sean. We're 5 minutes over.
Yeah. Howard said here, he's like, I bought the Thermo June straddle near the vol high. You can buy IV at high levels and make it pay.
Yeah, so I 100% agree with that. We're not saying like, so okay, this is not tasty trade, where like you basically have to set, where basically they recommend you sell IV when it's high IV rank. That's not what we're saying, right? In fact, we actually think that most of your money is made when IV is high, because realized volatility is outpacing implied vol. What we have here is our forecast of volatility. It's totally different than the realized volatility. It's our forecast, what we think is going to happen in the future. So for that reason, like you can definitely buy high implied volatility and make it pay. But I don't think you're getting paid here, even though realized volatility is way above. So you can see here, Howard, if you look, okay. So here, actually, we'll show you the time series. So you can see that for Thermo Fisher, the realized volatility is still outpacing, or has outpaced in the last 20 days, implied vol. But we're saying that our edge is better than just the realized volatility forecast and better than the implied. If we naively just extrapolate realized volatility in the future, we don't think that's a good bet. We try to go one step further, and that's where our edge comes from. But cool, you bought the July straddle, I think you said. Nice. I wish you good luck there. I mean, if volatility does increase, amazing. We get paid out big. And honestly, I don't think it's a bad bet, to be honest. Like if you look at it, it's like the implied vol. So remember, like with an option, if it's fair, with long options, if it's fair value, you should always buy it, right? Because it pays out in bad times, and there's no cost carry in the good times if it's fair value. So in this case, it looks like it's fair value. It's actually like 1% under fair value in our opinion. So it's not a bad idea to buy this straddle, and then if nothing happens, you're not going to lose a lot of money. But if something does happen, you're going to make a boatload. So it's definitely not a bad position to have on, Howard. I'm really glad you have that trade on, actually. hopefully hedge some of your positions on your long equity.
Okay, we're gonna wrap it up there.
Yeah.
We'll be back at it tomorrow.
Awesome.
Howard, tune in again, man. It was great.
Yeah. Great chatting with you, Howard.
All right, take it easy, everyone.